Derrick Rose should be sitting on a net worth of $200 million. What's up guys, Keith here. Now, I'm a huge NBA hoops fan. I got into basketball back in 2008 when I was in Oklahoma City. The Thunder was moving in and I got on that bandwagon. But I really didn't start following the league hardcore till 2011, when all the drama was going on. The decision, Heatles, championship Lakers, all that stuff was going on. My roommates at the time were lifetime Bulls fans, and their favorite player was Derrick Rose. They liked him even more than Jordan. In the middle of all the drama, he made this low-key prediction.
Why not? Why can't I be the MVP of the league? Why can't I be the best player in the league? I don't see why. Why?
He went next level with his play. He was dunking on everyone, making razzle-dazzle plays, and running the whole offense of a first-seed team. With the narrative that the best player in the league betrayed his hometown, while the hometown kid was blossoming along with the confidence to express his pursuit of the award, Derrick Rose won the 2011-2012 MVP. He was the best among up-and-coming superstars. D. Rose quickly became my favorite player. The following summer was great for D. Rose. In the CBA that came from the lockout, there was an exemption which they ended up calling the Derrick Rose rule. It allowed the Bulls to pay him 30% of the cap because he won MVP. He got his 5-year extension for $94 million. He signed the behemoth Adidas deal, which was worth a minimum of $190 million over 14 years. It also had $6 million or so in royalties per year based on sales. He also had deals with Powerade, Giordano's Pizza, and Skull Candy. Unfortunately, the next season, D. Rose had his ACL injury. Rose and Adidas campaigned the next season on a comeback story, but he had another season-ending knee surgery the next year too. The Bulls finally traded him to the Knicks, and he's jumped around from team to team since then. He hasn't had a big contract extension ever since. He has rejuvenated his career somewhat as a role player with the Wolves and the Pistons. But it's safe to assume that his financial income prime might be behind him. I'm not trying to make you feel bad for Derrick Rose or anything like that. Moreover, I'm just trying to point out how well set he should be financially. There's a subset of personal finance that's called financially independent and retire early. I'll call it FIRE for short from now on. All professional athletes should be pursuing FIRE because, well, they don't have much of an option but to retire early. Majority of the time, athletes kinda have to retire somewhere in their 30s. The tenets of FIRE are 3 simple things. 1. Have a high savings rate. 2. Invest in an S&P 500 index fund. And 3. Live off of 4% of your portfolio. Let's take a look at what Derrick Rose's financial situation would look like if he was to pursue FIRE. Now this part of the video might get a little mathy, so bear with me. Alright, let's start off just looking at his NBA salaries. So his rookie deal started off in 2009 at $4.8 million, and it slowly got bumped up all the way up to $7 million in 2012. That's the year he won MVP, and he got his massive extension. The first year of that deal in 2013 started off at $16.4 million. And it slowly got bumped up to $21 million by 2017. In 2017, that's the year he got traded to the Knicks and he finished up his deal over there. The next year, he ended up with the Cavs and towards the end of the season with the Wolves, and he made a combined income of $2.5 million. The second year he was with the Timberwolves, he made $2.1 million. The summer after that, he got a deal with the Pistons, but we're not going to talk about that for this video because that's, in the future. Now, let's take a look at the Adidas deal. Right out of college, Adidas signed Derrick Rose on a contract. They were paying him $1 million a year for the first 4 years. But the year he won MVP, his agents renegotiated that contract and got him on that massive deal. For simplicity's sake, I'm going to call it an even $20 million. This is the retainers and royalties and all that stuff combined together. This is supposed to run 14 years, mind you. So presumably he's still making that money in 2020. For the rest of the endorsements, Powerade, Giordano's, Skull Candy, I couldn't find any estimates on these. So let's go with the conservative assumption that he was making at least $5 million a year alongside his MVP extension with the Bulls. With all that being said, the totals of the salaries, Adidas money, and all the other endorsements come out to look like this. Now let's make the assumption that the high income taxes, insurance, agent fees, trainers, nutritionists, and all the charitable giving, all that stuff takes up 60% of his earnings every year. For example, for year one, his total income is $5.8 million, but after the 60% off the top expenses, he's got $2.3 million take-home pay. So his yearly take-home pay so far looks something like this. At this point, let's take a look at savings rate and net worth. Remember, according to FIRE, you're supposed to live off of 4% of your portfolio. In year one, let's say he is starting from zero. So let's call the income and net worth the same, which is $2.3 million. So his expenses should be kept under 4% of that, which is $93,165. So his savings for year one is $2.2 million. If he invested that money in the S&P 500 index fund, this would have made him some money in the background. In 2009, the S&P 500 yielded 26%. So going into 2010, his net worth should have been $2.8 million. Now let's move on to year two. The 4% withdrawal for his expenses is 4% of $2.8 million this year. That's $113,000. If he can't live off $113,000, I don't know what to tell you. His year two net worth would be his year one net worth plus his year two savings after his 4% expenses, plus, remember that index fund where he has invested his year one savings in? Yeah, that yielded 15% in 2010. That would have added close to $780,000 to his wealth in a year. After year two, his net worth should have been close to $6 million. Here's a list of how much that net worth could have been through 2019. Keeping the money in index fund all the way till the beginning of this year, that would have brought it to a little over $200 million. Only Derrick Rose and his financial advisors know what his actual net worth is. But just a quick Google search pulls up 85 million, which is not that bad. But there is a trajectory where Derrick Rose could have been frugal and invested in the S&P 500 index fund and been a billionaire by the time he was 52 or so. Let's say he kept that $200 million in the index fund and he continued living frugally. The S&P 500 has historically yielded 8% a year, so for the next couple of decades, let's make the assumption that it continues yielding that 8%. We're looking at how long it's going to take him to accrue $1 billion. Now, by back calculating the compound interest formula, this is how we calculate time. In this case, the time turns out to be 21 years. Now, these numbers are based on half-assed internet research and hindsight bias, right? So it's probably quite a bit off. But the point is, for most high-income people, you don't need flashy startup investments or crazy entrepreneurial success to be wealthy. The biggest factor for financial independence is how much of that income you end up keeping. When it comes to investments, just don't let some salesy fund manager charge you a bunch of fees that eat into the returns. Most of these funds don't beat the average returns of the market, so the best thing you could do is put in an index fund that just tracks the average returns. Financial independence should be something that's available to a lot of professional athletes. It's always a sad story whenever you hear about an athlete filing for bankruptcy right after retirement. If you're a professional athlete with injuries and circumstances always in play to cut your career short, it's better to think about your financial futures right from the start. Planning to retire early, even if you continue on with your career when you get there, is always a good idea. Thank you for watching the video, guys. If you're into personal finance related topics, please like and subscribe. And remember, like Marshawn Lynch says, always take care of your chicken.